In the energy markets today, I want to focus on WTI once again. Today, we're seeing a big move in WTI, lower actually. Now, after we saw WTI print at a 3-month high on Friday, we saw it open in that range this morning, but then we saw a downward move, and it primarily was due to the fact that we had our president tweeting to OPEC and Russia, indicating that he would wish that they would reduce their production cuts. And with that tweet, we saw the market drop significantly. WTI down better than 3%, Brent down 3.5%. So both complexes down significantly today, However, I think there's some other factors here. We have seen a significant run up in WTI and Brent, both together, and therefore there probably was a little bit of selling pressure built into this down move. Once it started to roll, we saw some people getting out of positions, some traders getting out of positions who had captured probably some of this up move. Now, will that continue moving forward? The jury's still out. The one thing I think that it does bring back into the fold is the Iranian waiver situation. Now, if President Trump does want oil prices lower, and if OPEC and Saudi Arabia do not comply, then there's possibility of maybe extending those Iranian waivers. And I think that's entering back into the mindset of the market today, as well as we did once again see WTI down to levels really that we have not seen the range for about 2 weeks now. February 15th is the last time we saw WTI around this 55.40 level. Another thing that needs to be considered as we move through this week, I think, is the supply factor. I talked about this briefly on Friday. Once again, I think it's going to be a theme this week when you see the dynamics in the marketplace. When you look at Saudi Arabia and OPEC, how are they going to react to this tweet? Are they just going to blow it off? I don't know. The question, jury's still out. But certainly when you look at their actions, they continue to ramp up their production cuts, and they are running ahead of schedule. And it looks like over the next couple of months, they expect to drain more production out of the market. So that's a dynamic that the market's trying to account for. Certainly when you look at what's going on in Venezuela, if that continues to roll out, those sanctions continue to kick in, and we see the uncertainty in the government down there, there could be further diminished returns coming from Venezuela as far as supply. We could see even a couple 100,000 barrels per day, even more than what's coming out of the market right now, if we see this thing continue to last for several months. And the last factor that the market is focused very much on is the production increases here in the United States, and we continue to see shale production ramping up significantly. So there's a counterbalance there between what's going on, the rest of the globe cutting production, and the U.S. continue to ramp up production. So it could be an interesting dynamic and create volatility in the space as we move through the week.